Alright guys, welcome back to our ongoing free YouTube mentorship. By the end of this video, assuming that you take notes and watch the entire thing, you will have a very advanced interpretation of a repeating model that will result in you making a respectable amount of money for yourself, assuming that you execute the model properly after learning it here. So let's dive straight into it. The daily chart, okay, here's our quarterly low. We failed to reach that, right? NASDAQ did what? Came down and swept it. We now have a S&P divergence on a macro scale on the higher time frame. We have these two wicks formed here within this volume imbalance. Notice it didn't leave a body through it on these two previous days here, coming into Thursday. This here makes this a target because we didn't leave a body through it. It's still inefficient. The algorithm is still referencing it and seeking fair value at these price points. Whenever we drop down here, this very large spike down towards the quarterly low, and we sweep that, that's a key level ran. But most people that are ill-informed, right, they're going to see this as a breakout, huge opportunity for selling, and everything's bearish and we're going to go to shit, and you need to be selling this. Okay, that's the sucker play. They sucker you in here, right here, and then as soon as these two daily highs form right here, these two little devils, we come up again, work in the range, trade down, revert to what? This here is not continuation. It's not. We anticipated longs before the fact and we're able to capitalize it. This is not continuation lower. Why is that? Because all we're doing, we're understanding that we're just filling in an inefficiency. Okay? This inefficient wick. All we're doing is reverting to 50%. And as soon as we do that, what else is taking place with 50% being worked in? Well, let's go ahead and check it out on the lower time frame. So before I drop down, remember we have three targets on the daily time frame now. Fair value in the form of this volume imbalance that has not laid a body through it, this fair value gap, and then buy side liquidity above these daily highs here. Very large pool of liquidity is going above here for everyone that wants to see it dump. Okay, now hourly chart, we come up, we take the previous daily high here, work in this volume imbalance / new week opening gap, and then we have this large decline Wednesday. On a weekly profile standpoint, when you're looking for longs, this is classic. This Wednesday retracement into a discount array. In this case, it was the wick. Once again, here's our fib. Trade down to optimal trend entry, 62% retracement. Notice one key signature at the 62% retracement level. Did we close below it? No, we close above it several times and form this swing low. That there is key and a dead giveaway for a reversal towards these key levels. Okay, now what else is taking place within here? Because without this, we don't really have much framework. Because without liquidity, we don't have a setup. We drop down below all these relative equal lows here. What's resting in here? Sell stops, sell stops, sell stops. Also, what else is there to note here? I keep pulling this fib out, don't I? What's right here? Equilibrium. Just so happens to line right up with this low right here. So not only do we have fair value being offered at this price point here, but we have sell stops here and internal sell side liquidity right here. Now that we have all this work done, we have our classic Wednesday retracement, we have weekly profile on our side, we have sell stops taken, we have a discount array delivered in the form of that wick, we have an S&P divergence, we have targets, buy side liquidity here, the fair value gap, and this volume imbalance here, / new week opening gap. What takes place coming into Thursday? Well, we drop down, touch the midpoint beautifully on the daily chart, and then we come up into midnight opening. We trade below midnight opening to do what? Well, what's this right here? This here is a classic bullish order block. Okay, so there has to be a reasoning to why we're trading below the midnight opening. We know that we trade below midnight opening to accumulate long positions on bullish days, yes. But what's really happening below midnight opening price most of the times? Well, that's where you're going to see all your raids on sell side liquidity, your order block touches, fair value gap fills, so list goes on. In this case, we drop down to create a failure swing, trade into the order block, and then we create another swing low. As soon as that happens, we now have an intermittent term low formed after all these key levels have been, touched and these sell sides have been taken. That's key because we now have bullish market structure setting up along with everything else we have to be able to frame longs here. Now, 15-minute chart. After we get the manipulation below midnight opening and we create the intermittent term low, we now have that 8:30 opening, giving us that first clue as to what this thing is going to be doing coming into the session open. In this case, 8:30 opening does what? Shoots straight up to the upside. And notice we retrace back down into it before going higher. That's so random, right? Yes, absolutely it's random. No, it's not. What else are we doing here? This here is a classic optimal train entry. This here is our short-term dealing range. We have the 8:30 low to the high. Okay, we use that for optimal train entry. Our daily dealing range at this day is this right here. Oh, wait a minute. What's going on here? Price is driven up into a premium. Everyone's trying to buy this that are ill-informed and don't know time and price theory. They're buying this, and then their stops go below here, which I'll get into in the lower time frame chart. Their stops are going below here. What else is down here? This fair value gap. That's inefficient. The algorithm wants to revert back into that and reprice in half of it to then continue the buy program. Once this is worked in, the algorithm is now free to do what it wants. You get what I'm saying here? These inefficiencies are not left behind because until they work them in, at least, a portion of it, they're not free to really move the way they want to. Okay, so once we get this delivered, we understand that things should really start kicking into that buy program once the time aligns, and I'm going to get into that. Notice another thing. Price is driven up into a premium relative to our daily dealing range, and then we drive down into the discount of the range. So we're now in a discount of the daily dealing range, and we're in a short-term optimal train entry. Okay, so here's that 60% retracement tapped. Here's that inefficiency. And now let's go ahead and drop down to the lower time frame. These right here, this was our primary target. So this right here is what? Maybe not the prettiest one you've ever seen, but this is a market maker model. Okay, so not only are these just, good old relative equal highs, but it's also previous daily high. What's targeted the most intraday? Previous daily high, previous daily low. Nothing more, nothing less. I was telling you guys about that sell side liquidity, right? The short-term stops when it drives up to premium. Where's their stops going? Right below this first significant swing low that was formed after their expansion. Okay, this happens more times than I can tell you. It repeats. Every time we get a large expansion to the upside, that first key swing low that we form, that's what you really want to focus in on because, there's going to be a good deal of liquidity below it. And you'd be surprised. You're like, wait a minute, who the hell would be doing that? You need to do your research, man, because I promise you it happens every single day, okay? There's always a sucker. Now, anyway, 1 minute chart. Why am I going down to the 1 minute chart with all this analysis? Because the highest probability entries are going to be derived from the 1 minute chart. Now, what happens here? Do we have sell stops taken? Yes, I already established that right here. Now, this 833 swing though right here, you're going to see that has been taken. And then here's our original liquidity void, okay, the 1 minute chart. That's going to yield, the most precise price point when we're looking at liquidity voids, okay? The lower the time frame, the better on news drivers like this. You're going to find that lowest inefficiency. Now, you can do the second chart. Yes, I don't personally do the second chart. Okay, you can find some things down here on the second chart that you can't find in the minutes, which I'm completely fine with that. I don't need it to be profitable whatsoever. Following this rate on sell stops, there's one more thing to note here, and I'm going to go ahead and drop to ES. So, we have sell stops taken, just like we do on NASDAQ, right? Everything looks the same, right? For the most part. There's one little crack in correlation here that we need to note that's a key bullish signature to the upside. We drop down, we take sell side liquidity. Do we reach this liquidity void on ES like we did NASDAQ? No, we did not. So ES failed to reach that liquidity void on the 1 minute chart, right? But ES did so. What is that? That's an SMT divergence. Whoa, wait a minute. Really? Yes. Now there's an SMT divergence. Obviously, you can reference this low here that was not taken, but we did sweep this on NASDAQ. But us not failing to trade in a liquidity void on ES and getting into it on NASDAQ, that is absolutely an SMT divergence. Okay, so we now have a strong bullish current underway with all the other narrative we had backing from the higher time frame. Notice none of this works without the higher time frame work that we've done. Now, what else is taking place here on a smaller scale? We have this original consolidation, trades down, sell stops taken, smart money reversal, and then ultimately we expand above the original consolidation. What's this right here on a short-term perspective? A market maker model. It's beautiful, isn't it? We expand higher. Where can you enter here? Right in this fair value gap. Is it a little bit tricky to, get in sync with real time? Maybe because of this one. Yes, but we understand the real logic of sell side of the curve, buy side of the curve. This should act as a breakaway gap and not be touched. Okay, so this is why you wouldn't anticipate this to be worked in. So we have this fair value gap right here. Okay, this here is one opportunity. And honestly, not much more opportunity in my opinion after this entry here. I believe this is the only high probability opportunity in my opinion. So you'd be longing here, and then you'd be aiming for this new week opening gap and the buyer side liquidity up here. Where could we have entered on NASDAQ? Let's take a look. Okay, same exact thing. Original consolidation, relative equal highs, trades down, liquidity voids, smart money reversal, expansion above original consolidation in the form of buy side liquidity. We have this small fair value gap in price right here. Notice how we kind of work on the heels of it multiple times, and then we expand higher. Opposing ES, there's actually two opportunities here on NASDAQ. We see us drop down below the short-term low within the liquidity void here, and then we get this aggressive expansion above, closing above not only this opposing fair value gap here, but this up close candle here. So bearish order flow is now upset because we're closing above two opposing rates. After we do that, we work in this 1 minute fair value gap. That's opportunity number one. That's distribution phase one. Okay, and then we trade back down to this one, and here's your second opportunity. Aiming for new week opening gap and buy side liquidity. Now, what's the glue that brings this all together? What did I tell you about time? People that don't have an understanding of time and price theory, they're getting stopped out in this price action here. Now, this here just so happened to align with our macro. When was the buy side liquidity in the form of the original consolidation delivered? Right within this macro. Where was this expansion after we had a key level worked in? Right within the macro. This shit isn't random, guys. Okay, it's right here in the charts, and it repeats over and over and over again. You just have to be patient, okay? Not every day has to be a trading day, but this absolutely is right here. That's why I'm going back on it, because it's noteworthy. Now, that pretty much sums it up there, okay? That right there was an absolute masterpiece of a teaching, and if you didn't take notes, pretty much wasted your time.